Yeah, here. Right? Don't worry about other areas. Yeah, here. We accept the client. We completed the engagement letter. We have that terms and conditions. And then we arrange our audit team. So then, from audit team perspective, you may have a kind of question. Once you are gathering, once you are appointing, once you are selecting team members to your audit team, what are the areas you need to consider? Experience, and then client requirement. Client requirement in the sense the complexity of the client, right? And then whatever the knowledge, certificate they have, experience plus qualification, past experience with that client, right? Industry knowledge, all those aspects should be considered once you are arranging your audit team, plus independence. You have a good senior, right? Good senior, specialized knowledge about insurance. I'm going to appoint to the audit team, but her father is the CEO of that company. Can we appoint her? That. So very. We have a we have conflict of interest. So after audit engagement deliver කරන්න with integrity, she can't deliver the outcome, right? We have another relationship. Once she is delivering her responsibility, she need to commit it with another relationship. So then it will affect to the objectivity. So then she may deviate from the objectivity. She is delivering the service. So then independence, once you are designing your audit team, you need to carefully evaluate the team members. For that, we need to have kind of an independent assessment. That independent assessment should be done at the initial stage, at the mid, at the end of the audit. Why? At the initial stage, we don't have such kind of relationship. In the mid of the audit, end of the audit, there may be a relationship with the auditee, right? Or the audit manager, CFO and the marital end of the audit. Right? So then it will impact to the independence. Right? Then all those aspects should be evaluated in an audit field work. So then audit team is a critical aspect. Whatever the task you are going to do, you should have a proper team. Then that's the requirement. And then now you have a team, you have terms and conditions, you accept the client. Then what's the step you are going to do? You are going to understand the business. You are going to study the business. How are you going to study the business? What are the sources you can refer? What are the information sources? What are the steps you are going to do for this? One of the information sources. Understand the business. High technological, high accounting treatment sector. We full education is updated. Like operating report you can एक राष्ट्र के लिए आठवां पढ़ना है ना हमारा पढ़ना बड़ा है करने का मीटिंग करना है मीटिंग बड़ा है सिलेबस का ठीक है इतना बड़े करना बता क्या है बॉडी प्रोसेस है क्या है बताओ nanti mereka akan melakukan nanti monitor namanya ada kalau ada dikalian itu nanti itu nanti dalam siapa That's the nature of the subject, right? But we need to focus, right? The small things. If you are starting audit, we need to accept the manusia sampai accept කරන්න ඕනේ. accept කරන්න නම් මොනවද? එයාට තව relationship තියෙනවා. එයා මොන වගේ කෙනෙක්ද? එයා pyramid transaction කරනවද? drugs dealing කරනවද? සේරම බලන්න. ලංකාවේ නම් මාසාවක් කරනවද කියලා බලන්න. එයා මොනවද? legal ගන්නවද? ඒක තමයි හොඳ ලක්ෂණ. And they are like, the same way, we need to have first we have client acceptance. So then, what's the it was the registration that may happen. So registration can not happen. It's a letter of engagement. Engagement is that one can affect. So auditor client and engagement is only there. Some engagement can take. So then, audit team maker. So makers relate to the understand business. Business is understand the first product engagement. Medical no na amaru. Product alno engagement understand the theory. Engagement acceptance is understand certain. So then we do we are getting some understanding about the company. Whether they are doing proper business, are they having proper controls, how about their director boards, is there any person who are having the bad political history, so then we need to put in all those aspects. And then we are coming to here, and then we are appointing audit team, right? And then understand the business field, further we study the company. My question was, how we can do this? Oh, understand the business, what are the sources we can follow? Itala kiyana ba? Para business and understand karana. So that depends on two different scenarios. If it is last year business done by you, it's very easy, right? You are very familiar with the mechanic. Last year audit was done by a different auditor. So when this is a new audit, if it is so what we are doing, so two different aspects. Because last year auditor, you can use to go to the last year audit finance goes through it. As your colleague said, annual report can be reviewed, financial can be reviewed, website, all the information you can do kind of a activity, and then you can have kind of a director discussion, management discussion, you can pass to your audit committee, and you can talk to the management team, all those things can be done. So then that can be a question in the exam. Once you are performing your task under to understand the business, what are the information sources you have? That can be a question. So then that will be equivalent according to the nature, situation. It may be initial audit, it may be a recurring audit. If it is initial audit, you can't depend on the last year file. What you can do is you can communicate with the last auditor, predecessor auditor, home auditor. You can communicate. You need to get a consent letter from the last auditor. If there are any legal or any limitation to the audit work, if there are any professional limitation to deliver the service, you need to get a consent from the last auditor. That's a very uniqueness in this field. That's a standard requirement. Then marking, than doctor කෙනෙක් ගාට කියන බෙහෙත් ගන්න. ඒ ડોක්ටර් නැතුව ඔයාලා වෙන හොඳ වෙන්නේ. ඊළඟ ડોක්ටර් ගාට යනකොට අර ડોක්ටර්ගේ දෙත එකක් කියන්නේ කියලා. or then normally class you are reading for starter, so whatever the course, you are going for one class, you are not that much comfortable with the content and the way they are doing. You are changing your lecture. So then are they requesting a letter from former lecture? No. But in auditing field, it's a different profession, right? If you are moving out from one auditor to another auditor, we need to get a consent letter from last auditor. So that will save our professional behavior. Right? Always we are not marketing as auditor. We can't say that we are the best auditor. Advertisement and we go for අපි තමයි හොඳ මොඩිටර් කියලා හොඳ නැහැ. අපි තමයි හොඳ බෑග් කියලා යනවා. බෑග් ඉන්ඩෙක්ස්. එහෙම යනවා. ඒ ඔඩිටර් අපි තමයි හොඳ මොඩිටර් කියලා නැහැ. ඒක පොඩ ප්‍රතික්ෂේප කියනවා. You can't do that kind of advertisement. You can do kind of a brand awareness. What are the services you are doing? You can't say that you are the best. So the whole chartered accountant we consider as a same level. So, we are discussing about understand the business. What are the sources we can follow to understand the business? And we are doing a kind of a new audit. What the requirement is, you need to get the consent from previous auditor. And secondly, what you can do is you can get access to the last year audit file which was done by the home auditor. That's the audit permitted we got. File later review to run the access is here. So then we can have good understanding about the last year audit. What are the material levels and what are the key issues and audit qualifications there, management letter points, all the things will be discussed with the last year auditor. Understand the business. If you are appointed to a hotel audit, what you can do? You can do a factory visit, right? Last week I discussed. Once you are doing your factory visit, you can understand is there any banquet facility, any rent shops, what are the restaurant you have, what are the type of the guests you are focusing about, how many rooms you are having. You can see once you are doing the visit, they have 150 rooms, but 50 rooms is still not, in the operation. They are in the development stage. So then in the books, they should have a WIP then. WIP. So likewise, you can do kind of a factory visit, or else you can have discussion. You can have board minute review. You can talk to the regulatory teams, lawyers, and then particular regulator. If it is a bank, you can discuss with the central bank. If it is insurance company, IRCSL. All the regulators are there. You can talk to them, right? If there are any legal cases, right? So then you can complete, understand the business. Understand the business means, so then I discuss about the sources, information, points, and then if I am going to change the question, we know the resources, sources, and the extraction points. So then, if I'm asking like this, what are the areas you need to focus? What are the elements? What are the knowledge facts you are going to get under this area? About the operation, about the financial situation. What are the products? How about the director board? What are the commitments they have? What are the legal cases they have? Right? What are the future plans? Are they going to do a kind of initial public offering? So then, how about their financial situation? Is there any governance, loans and borrowing facilities. Then all those aspects should be focused. That's a different question. Now you know sources, and through that sources, what are the areas you need to touch up? And then, by getting this understanding, you need to understand the entity level controls as well. Entity level controls. What do you mean by entity level controls? I think you know that, right? So we have already done in the control environment. Under control environment, we discussed what entity level controls and what level controls. Entity level controls and what level? What level they can kata ada? Dia kata controls yang kata we are having entity level controls and assistant level controls. Entity level controls and assistant level controls. Right? Entity level means overall financial statement level. Controls, you know, right? Controls are the steps, actions taken by the management to prevent, detect, correct misstatements in the organization. To address the business risk, they establish controls. Some of the controls, accession level. Some of the controls, entity level. Some of the controls, transaction level. Some of the controls, entity level. We have many controls there. Some of our controls are overall set level controls. Some of the controls, batch level controls, right? The attendance sheet, attendance sheet the main class attendance sheet it's a batch level control. Then security can do door එකක් තියෙනවා right? Sample level එකකින් control එක CCTV right? So then that's a once you are having a kind of control setup, we are having this combination transaction level controls and the entity level controls. As auditor, what you have to do is at the understanding stage, at the initial stage, you should know what are the entity level controls in the organization. That audit entity level controls. Basically, control environment, monitoring activities, HR activities, corporate governance aspect, IT environment, technological aspects, password protection, cyber security protection, right? Are they having committee structures, procedure manuals, so then systems, all those aspects you can consider as entity level controls. As entity, they are having a control setup. So then you need to understand that before you are going to the balance level, transaction level, you should know what are the entity level controls in the organization. And then now you are equipped with these aspects. Now I said client was studying acceptance. So then you have a terms and conditions, you have a team, and you study the company. You are equipped with all the resources now. You have the knowledge, terms and condition, team, all the things are there. Now you are ready to audit. Now you have knowledge about the entity. So then again you are getting the draft financials as well. Draft financials as well. After you are completing these steps, you will be receiving the draft financials. Draft financials. Based on draft financials, what you are going to do? You are going to calculate the maturity levels. Maturity levels. maturity levels. Draft financials statement. Financials. I think you know financials. You know financial statements. Draft financial statement. That was not audited. Still draft. That can be changed. That is called draft financials. That can be depend on. That may be prepared as of interim date. Let's say 30th September. 30th November or 31st December. It may be for interim date or final date. Draft financials. Based on draft financials, what you are going to do? Maturity calculation. It's a bit complex area. They are more lazy. First time what? First time then. One of the ideas is not good one day. LOE first time good. The team making UVT entry level controls. I think you are comfortable. But maturity levels, that's maturity calculation. Materiality. It's a big, it's a common word, right? It's material. What do you mean by that? Materiality. Materiality. What it means to you? So I'm not asking the audit definition. It's general terms, materiality, it's material. Material, you know, whatever the ingredients we are using for some of the output, that's a material. In other words, material is relevant, relevant to impact. Material to you. Materiality calculation. Why do we need to do that as a measure? Materiality calculation. Do we need to calculate materiality? What's the reason we need to have a materiality level? The first is we are not ready to issue a certificate. We are issuing a assurance report. Because of that, we are not ready to check all the things. We are not ready to check all the things while we don't need to issue a certificate. So then what you have to do? We based on the sample basis. Once you are selecting the sample, we need to have a benchmark. Depending on, we need to select material levels. We can't say all the things. We can't take all the transactions. We need to have a kind of a threshold to select samples. To do that, we should have a material levels. And this is an example. A material level. Why we should have engagement letter? So then once we are having engagement letter, what are the things we think? Why we are worrying about the material level as auditor? Why? As auditor we are issuing assurance report. Assurance report is not a certificate. We don't want to say all the things. We need to select samples. Once you are selecting samples, when you are taking decisions, we need to have a maturity levels. You can say, without thinking about too much, what you can say is, once you are taking decisions in the audit field, we have a maturity level. As a human being, once you are getting decisions, do you have a maturity level? Yes. That's what happened. What decision done now, what maturity level is up here? ये लेवल में जाके तो वहाँ हमारे डिसीजन है now again ये तो पाले रिपोर्ट से सारी किया था Salil. Then another here another pahak there. 5 rupees there. Then here there is sun there. Now become advanced or CR there. Now become here. Dahak there. Dahak there. Material there. So then once they are taking decisions, we have material level. Once you are schooling, taken in the balance, you are बहुत particles. So then once you are changing your profession, once you are going up to on your ladder, so then your maturity level will be changed. Or then with the school level pale, so we can get it lah, and you can get it. Yeah, ladder will price tag එක බලන්න කීයක්. ඒක බලලා ගන්න වෙනවා. මේක වාට දෙනවනේ රේන්ජ් එකක් නේද? ඔව් දැන් මේ අඳුමක් ගන්න යනවා සාමාන්‍යයෙන් මේක ගන්නේ මම less than 10,000 තමයි ගන්න. කියනවා. ඒක මොකක්ද වගේ? That is a maturity level. So then what equity level, financial maturity level, color and quality. You need to have a level. You need to have a threshold to take the decision. Am I correct? So, many times I have what we have a threshold there. Lecture also Megana Halu, Megana Sudu, only Megana Digger. You have maturity levels. You have threshold to take the decision. Right. This is a price level control. Right. So then, once you are taking decisions as an auditor in the audit field work, planning, execution and control, execution and conclusion, you need to have a threshold to take decisions. Right? So then what you have to do is you need to calculate a maturity level. You need to calculate a maturity level. Right? So then right. So then how are we going to calculate maturity levels? What are the maturity levels we have? What are the decisions you are going to make? Then accordingly, this is a kind of an area you need to focus on. Now you know what's the reason for having a maturity level in the audit field. And as auditor, you can calculate different maturity levels. You have different maturity levels to take decisions. Because one level can't be used, right, to make decisions. You are having maturity level. Based on that, you can do decisions. But for different decisions, different levels, you should have different numbers. Different levels should be there for different decisions. Different levels of decisions, right? Some of the decisions you are getting as a whole to the financial statements. That is the PM, planning maturity. Some of the decisions you are taking to the transaction level, accession level, balance level. That's called total level. So these are the two maturity levels we need to focus in as auditor. One maturity level is focus about the overall financial statement. One maturity level focus about the transactional level, accession level decisions. What do you mean by that? Whatever the maturity decisions, you are having that. Then what එළිය කෙනෙක් ඉන්වෝල්ව් වෙන මැටීරියල් ලෙවල් එකක් වෙනම තියෙනවා නේ. ඒක කීයද? 50 rupees. that's maturity level. වා ඇඳුමක් ගන්න යනවනේ maturity level එක. 5000. වා වාහනයක් ගන්න යනවනේ maturity level එක 5000. Once you are changing your decisions, the level of decisions depends on different maturity levels. Different maturity levels. Right? So then, in your house, in your family, father taking decisions, right? Father taking decisions. He is taking decisions overall family level. Individual level, individual person level. So then he is doing kind of a overall family level decision. The benchmark may be 1 million. If he is getting a decision individual level, then 1 degree with a spend. Individual කෙනෙක් විදියට 2 million මට ස්පෙන්ඩ් කරන්න පුළුවන් මම එඩියුකේෂන් වල. Right? So 2 million. So that is the level. You need to focus on one person in the family. Okay, brother or sister, mother and sister, they are 2 million. They are like, you know, mother degree up here now, physical science, degree up here now, 10 million, 10 million. Half of the year, back in another back end. Individual person level, maturity level is here, 2 million. 2 million. But after again renovate करना so then he's planning to renovate the house. Budget may be 30 million. For the 1 million. System after the 30 million we renovate කරන්න පුළුවන්. මට 10 million දෙන්න බැරි අය කියලා. තාත්තා උත්තරේ මොකක්ද වෙන්නේ? What is going to tell? This is for overall house level. This is individual level. So then in your life, you are taking decisions in different levels. Right? Once you are taking different levels of decisions, you should have different maturity levels. Right? Class auditor, we are having different maturity levels. Planning maturity will impact to the overall financial statement. Whatever the decision you are taking for overall financial statement, you based on planning maturity. If you are taking a decision related to a transaction or balance, depends on the total level. Right? We discuss in about maturity levels later. That's a bit about maturity levels. Right? Now you know why we are worrying about maturity levels, and once we are having maturity levels, we may have two different maturity levels to take decisions. That is the core aspect, core knowledge point you need to get in. Why we are worrying about maturity level and what are the maturity levels here. A product clearly maturity levels. So that is the requirement. And then now you have the maturity levels. You are going to select significant account, significant disclosure. Then first, we are in a very crucial step. Other thing, once you are discussing about maturity levels, as auditor, once you are selecting your maturity levels, what's the concern? What's the focus area? The focus area. You need to focus about stakeholders, perspective and expectation. Then here we have draft financials, right? Draft financials. We are here to issue a audit opinion. After issuing the audit opinion, this will be used by stakeholders. Stakeholders may change their decision based on this audited numbers. So then based on the audited numbers, they will change their decisions. Material mean, as I mentioned, material mean, it will impact to your decisions. That's your definition. Material mean will change your decision. It will make the impact to your decision. If it is so, it is material. So that's the definition is standard, right? Material definition is case one case one standard. We have accounting standards. We have case 2, 16, case 1. Case 1 discuss about financial statement elements, financial statements, purpose of financial statements, right? Once we are discussing all those things, we have a word called materiality. Materiality, set off, all those things are there, right? So then, if it is material, you can't set off asset and liability, right? That's the logic. That's the basic understanding you are having. If it is material, it impacts your stakeholder decisions. So then, to this audit opinion, you are issuing to these financial statements. Once you are deciding your maturity levels, what we need to focus. Once you are deciding your maturity levels, you need to focus about these people. Stakeholders' perspective and expectation is really important to decide your maturity levels. Stakeholders' perspective and the expectation that will impact your maturity levels. Right? That's the final outcome. Expectation towards the final, the customers. So then materiality, prices, all those things should be focused about target market. So then that's a way normal company, let's say they are deciding to decide kind of a price changes. Once you are doing price changes, what do you think? What's the benchmark? What is material level will focus? You will focus the target customers. Same way, your target audience is stakeholders. You are issuing audit opinion to stakeholders. So then that report will be used for their decisions. So then once you are calculating maturity levels, you need to focus about stakeholders' perspective and right. Keep in mind this concept. You decide what we can do, how it impact, all those things can be discussed. Then they have a audit there are 2011. It's an insurance company. Insurance company PM 2 million. Now PM calculator is done PM 2 million. 2 million is done. Planning activity amount 2 million. 2 million financial statement level decision done. Impact qualify done. 2 million, right? And then I have a balance. I have a balance 250,000. 250,000 donations, right? Insurance company 250,000 donations. So then I concluded the audit. I finalized the audit. I issued audit opinion. It was published in the stock exchange. Stock exchange published and in the annual report. And in Galle. Saturday තමයි ටිකක් ගාලා. Right. 2 million 250,000 donation එකක් තියෙනවා. Audit එක finalize කරලා ඉවරයි. So then after archiving the file, after 6 months time, I'm getting a letter from Insurance Regulatory Commission. But it says so then he's asking, you have audited and you have signed off the financial statement, you have issued the financials. In the financials, under the notes, we have a special notes. Right? This after derived to the profit after tax, these expenses were deducted. We have salaries, we have auditor's expense, legal charges. The specific expenses were summarized in one note, right? You are familiar with that, I think. No? There's a note in the financial statement, very common note under the P&L. What is that? The above profit was derived after deducting these expenses. That is a very common note in financial statement. Under that, we have a narration called donations, and we have 250,000 amount. And regulator, IRC is asking, as an insurance company, they can't use public money, insurance funds for donations, right? As auditor, what we have done, audit procedures for this, what is the content of this donation? Thanks. I'm getting a direct letter. And then, what I did was, I got that letter, and then I went to the audit file, and I checked what's the content of this donation, what's the date of this. So, unfortunately, it was not tested. Why? The PM is 2 million, PE E may be 1 million, 250 is a very immaterial balance. Very immaterial balance. What we have done is we have directly indexed from the trial balance and we have not done it. We have done nothing. No audit procedures. We have not studied the nature of that. Then what we did was we went through again with the client test and asked what's the nature of this account, and we requested the breakup for 250, AE balance, AE listing, and then finally we understood that this was linked with the kind of a bank charges which was done at the bank reconciliation erroneously posted to this account. Last year balance nil. That's a doubt that IRC is concerned with. So then we reported to the IRC cell, this containing erroneous posted bank charges. So then we went through that and we communicated to the IRC cell. So then my point is what? So then once you are issuing the audit report, in the stakeholders list, we may have different stakeholders focusing about different balances. Some of the stakeholders focus in the profit. Some of the stakeholders financial position. Some of the stakeholders like regulator focusing about donations, right? And they don't care about the balance. They care about the qualitative aspect. So then, once you are designing your maturity levels, you need to focus about perspective and expectation of the stakeholders. Are you comfortable with that? Except stakeholders like regulations are in line with the theory. It's really important, right? As a auditor, you need to know the related regulations and you are deciding your activity levels, right? Okay. So we'll discuss further about maturity calculation, basis, how we are going to calculate. So then what are the levels, how we are going to use these maturity levels for the audit qualifications, all those things can be discussed. But as an initial, as a foundation, you should know why we are using these maturity levels, why we are worrying about different maturity calculations. Once you calculate maturity levels, what's the ultimate perspective? I hope you are clear, right? Okay, now we are going to this aspect. Any questions? Doubts? As I said in the first lecture, financial statements consistent with account balances, account balances, account balances, boleh anu dia. Dia anu keyword kan. Financial statement consistent with boleh kan? Boleh, I think ada mana ada table. Then the other make this was very far the every part here. Sample there, make every part here. Asu very part here, but that one. Amadam here there. And make an original. This is the area we are going to audit. This is the financial statement, right? This is a financial statement. This financial statement consists with account balances and disclosure. Wow, මේකේ පන්ති ළමයි කම යනවා ෆයිනෑන්ෂල් ස්ටේට්මන්ට් හැදිලා තියෙන මොකද කියලා අපිට කොහොමද? කොලේ තියෙනවා ඊට පස්සේ බැලන්සස් තියෙනවා ඊට පස්සේ වචන තියෙනවා. හරිනේ? ෆයිනෑන්ෂල් ස්ටේට්මන්ට් හැදිලා තියෙන්නේ කොහොමද? පන්ති මොනවද? We have account balances and we have disclosures. Simple. We have statement of financial position, statement of income, cash flow statement, equity statement, plus notes. This all 5 elements consisted with account balances and disclosures. Simple. In account balances and disclosures. Okay. This account balances and disclosures came to this financial statement because of transactions. Because of transactions, we have account balances and disclosures. Last year, account balances and disclosures, we have taken because of transaction happened during the period. Otherwise, the same financial statement will appear to this year end. Last year financials changed to the this year end because of transactions. Because of transactions, we changed account balances and disclosures. So then, as auditor, what we are going to do? We are going to audit these 3 elements. What is that? Account balances, disclosures, and transactions. We need to audit these 3 elements once we are delivering your opinion. As I said, we are not going to audit 100%. We are not going to audit 100%. So then, are you going to audit 100% account balances? No. Are you going to audit all the disclosures? No. Are you going to audit all the transactions? No. What will you do? You have to select what significant accounts, significant disclosures, and significant class of transactions. Right? You need to select what are the significant items. What are the significant items which will be relevant to stakeholders, so that you can benchmark the maturity level. After you are calculating the maturity levels, you can do this. You can, once you are using the maturity levels, you can decide this. So then, you need to decide what are the significant accounts, what are the significant disclosures. You need to select the key disclosures and key balances which you are supposed to audit. And then, what else? You may have a list, right? And then you can say, CT here, significant transactions. Account balance and disclosure and transactions. So, SS significant account, significant disclosure, significant transactions. So that here we have different, right? Spots, significant class of transactions, significant accounts, significant disclosures, significant accounts. You are having very limited number of accounts, right? You can count down accounts. What are they? Salaries, revenue, and then depreciation, and then donation, RPT, earning per share, contingent asset event after the reporting period. So then these are balances. These are disclosures, right? These are disclosures. These are balances. So then you can count down these disclosures and balances. If I'm asking, tell me 10 disclosures, you can say that, right? EPS, RPT, fair value, contingent liability, segmental reporting, all those things disclosures. And balances, what a conceptually balances are here to get money. Consider salaries, PP&E, depreciation, revaluation reserve, cash inflows, right? Equity, the equity change. Likewise, you can mention 10 different numbers. So then you have a list. Through this list, you can select what are the significant accounts and significant disclosures. Significant accounts and significant disclosures. Significant accounts and significant disclosures. How are we going to decide that? You can say that based on the maturity level. Based on the maturity level. Based on the maturity level. Let's say maturity level 500,000. 500,000. Above 500,000, we can say it's material, significant. Yes. You can say that it depends on the maturity level, right? Depends on the maturity level. So then, not only that, we need to focus about other aspects as well. We can't purely depend on the numbers. We need to focus about qualitative aspect. Qualitative aspects. So then, according to the previous example, I depended on the 2 million number. Because of that, I have missed this. But it is significant. So then what you have to do? We can't depend only on the number. Don't depend on the numerical figures. You have to depend on the, you have to study about the qualitative aspects in the industry. What you are selecting your significant. Especially for liability accounts. Nature of the account is very important. Liability accounts. What do you mean by that? Liability accounts. If you are selecting a benchmark amount for liability accounts, your perspective and your selection may be two different aspects. There's a contradiction with your expectation and the selection. What do you mean by that? In a balance sheet, you are having assets and liabilities, right? Asset and liabilities. Asset, there's a risk. Liabilities, there's a risk. In a balance sheet, we are having two different risks. What are they? Overstatement risk and the understatement risk. Management can overstate balances, management can understate balances. There's a risk. Always there's a risk of what? Overstatement of asset, understatement of liabilities. Overstatement of asset and understatement of liabilities. That's a risk we have in from a balance sheet. Asset valuation, they prefer to show their assets. They like to show their talents. like to say that I'm using iPhone, I'm using this type of vehicle, I'm having this type of qualification, right? So my parents are living in here and my relations are in this country and that. So I like to say that your competency, overstate asset. Sometimes you also say, right? Are you willing to say that your weaknesses, but for the outside of the can but can put up make connected and put a care. Are you willing to say that? Are you going to tell your weaknesses? No. You want to hide all those things, right? So then, as a company, they are having a lot of the challenges and weaknesses and the unique some deficiencies, right? They want to cover all those aspects. They are having some liabilities. They want to understate liabilities, right? Understate liabilities. They are trying to understate liabilities, right? They are trying to understand liabilities. You are creating a benchmark and you are selecting more than values. That's contradiction, right? Are you getting what I am telling here? You are going to select your mandatory level is 500,000. You are trying to select more than 500,000 transactions, more than 500,000 liabilities, so that you can select only 600,000, 800,000 liabilities. You will select this. But management trying to what? Trying to understate liabilities. They have a liability 650,000. They have a liability 650,000. What they want to do? They want to understate liabilities. What they are going to do now? They are trying to issue bogus checks. Bogus checks 200,000. Bogus checks is correct. Yes, they can issue check. We are not hand over into the party. Still in our drawer. What we can do? Cash credit debit to this liability account. So then 200,000 debit. Now what about the now? 200, 450,000. Now 450,000 to a mandatory level, 500,000. You are taking decision based on the mandatory level. You are selecting more than 500,000 liability items. Now your balance 450,000. Because of this error, this is a fraud. Intentionally they issued bogus checks and reduced the liability. Now reduced to 450. You are selecting samples based on the numerical number. Right? You are selecting more than values. You are trying to selecting more than values, but liability values you are trying to understate. Right? So your expectation and the management fraudulent mindset contradict me. Right? Are you getting what I am telling here? Because tricky. Once you are selecting liability accounts, my point is, don't depend on the numerical value. Don't depend on kind of a benchmark. More than P, more than this amount, I am selecting, right? So the management always trying to understate. So then your zero liability balance will be material. So the last year we had 2 million, this year 0. Last year 2 million liability, this year 0. Your zero balance may be material. Why? Management trying to understate liability. So then once you are dealing with liabilities, my advice is don't depend on the numerical figure. Once you are selecting liability accounts, liability significant account, don't depend on the maturity level. You need to evaluate the qualitative aspects. Right. Now we are at audit process. We started from client acceptance, LOE, audit team, UBP, draft financials, maturity levels. Now we are here. Significant accounts, significant disclosures, and class of transactions, right? So then We are now going to discuss what's significant accounts and significant disclosure. We have account balances. As I said, in the financial statement we have financial statement consistent with account balances and disclosures. And these account balances and disclosures came to the financial statement because of transactions. As auditor, we are not going to take 100% of these. We are going to select significant account balances, significant disclosures, and significant transactions. Right? Now we are discussing. Now we discuss how we are going to select significant accounts and significant disclosures. Significant accounts, how we are going to select? Based on the material level, you can select. Qualitative aspect, you can select. Qualitative. So whatever the nature of the balance, regulatory related balances, related party related balances, the balances having manual relationship, manual intervention, you need to select. There's a balance. Our material level 2 million. Balance is 5,000. 5,000. What's the nature? Legal fees. 5,000. Our material level is 2 million. How about this? As auditor, you need to focus about this. Why? Qualitatively, this is very significant. Reason is the legal fees. You need to question what's the reason you incur this legal fee. Is there a legal case to the organization? Do we need to make a provision? This legal fee may lead to a provision of 50 million. There's a kind of complaint to the organization claiming kind of 50 million. So the fine may be there in the near future. For that, we need points. So that's an indication you need to evaluate. As auditor, if there's a legal fee account without considering the monetary value, but considering the qualitative aspect of the accounts, you need to focus there. So then, once you are deciding your significant accounts, you need to based on the material level plus qualitative aspects. So the exact question is what? As auditor, once you are deciding your significant accounts, what are the considerations? According to the case study, what are the significant accounts you are going to select? What are the reasons? Right? Significant account selection. Then, significant disclosure selection. Simple, right? Based on the standard, this is the required disclosure. If it is so, it is significant. Based on the industry practice, based on the specific regulatory requirement, it's a essential, it's a required disclosure. If it is so, it's a significant disclosure. Right? So then we know that significant accounts and significant disclosures. Now I'm moving to significant class of transactions. But as I said, you can't say that significant transaction, right? Significant transactions. Why we can't say that? So the significant accounts and significant disclosures we can list down, right? We can count down significant balances and significant disclosures. Significant accounts, asset, inventory, receivable balance, cash, yes, salaries, depreciation. Likewise, we can count down balances. Disclosures also same. We can list down easily. You may have 20, 50 disclosures. You may have 200 account balances. Simple. 220. From that, we are selecting significant accounts and significant disclosures which will impact to the stakeholders. How about transactions? Can you select significant transactions? In an organization, within a year, there the 12-month period, there may be millions of transactions. Millions of transactions. Can you imagine? In a supermarket, in a bank, in an insurance company, in a whatever the outlet, there are millions of transactions. So then, in a bank, they do transaction by using the bank branch, ATMs, fund transfers, online transfers. All those are transactions, right? Through these transactions, how we are going to select significant transactions? And to select that, very difficult, right? Significant transaction selection is really difficult. Within a year, you may have different transactions, different type of, different amount of, different nature of transaction in the year. So then what you are going to do? You can't select, this is significant, this is significant, this is significant. It's not practical. Then what you are going to do? First, good afternoon. What decision they are going to do? What you are going to do? You have millions of transactions. You have what, you are going to sell something. You are having very limited number of items, right? Let's say you are selling antique items. Antique items, very old things, right? You are going to sell it. You have 20 antique items. 20 antique items. So what I am going to do is, I am going to put one bucket and say these are each and every one. You can say 5,000. So what I am going to do? What you are going to do? You are going to price each and every item, right? This side, this 20 item, this item 5,000, this item 6,000, 8,000. Likewise, you are going to price each and every one. Right? Water, amba godak tiyena mikuna. You have a mango. You have mango. These days we have durian, right? Or let's say mango. You have a bunch of mango to sell. What are you going to do? Are you going to price each and every mango? This mango 20, this mango 25, 30? No. What are you going to do? You are going to get decisions based on the class. You are going to do what? You have 20,000 mango. You can differentiate this based on the features, based on the nature, based on the similarities. මේවා ටිකක් ඉදුණු ඒවා එක කොටකට දාන්න. ටිකක් ලොකු ඒවා එක කොටකට දාන්න. නේද? So this once you are getting this bunch, it may be 20 rupees. If you are getting this bunch, maybe 50 rupees. So then you are going to cluster. You are going to class this. Right? You are having classes to take the decision. Are you getting what I'm saying? We are going to separate these transactions based on the similar characteristics. We are having millions of transactions during the period. As auditor, we can't select significant each and every transaction. It's not practical. What we are going to do is, based on the similar characteristics, we are going to cluster this transaction. Right? Cluster this transaction based on the similar characteristics. As we said, like this, same mango, we are putting to same bucket, same class. In a school, are we teaching, are we focusing to each and every member? අපි හැමදාම මෙන්න ටීචර් ගේ හිතුව ගන්න ඕනේ ක්ලාස් එක දාලා. දැන් සැබ් එකේ එක බෑච් එකේ හැමදාම එක ළමයට කරන ලෙක්චර්ස් නෑ. So what we have done? We have more than 20,000, more than 5,000 students. What we have done is, based on the characteristics, we have 15A, 16B, 17XP, right? We have different classes. For the decision making, practicality, based on that, as auditor, what we have to do is, based on the similar characteristics of the transaction, we are going to class these transactions. That is called classes of transactions. Classes of transactions. We have different classes. Then here we have a question. Are you going to audit each and every class? Are you going to audit each and every class? Now we can count the classes. Right? Previously we have millions of transactions. Now we have like 20 classes of transactions. Some of the transactions relating to ATM transaction, fund transfers, direct payment, admin payment, salary payment, furniture, capital expenditures. Likewise, we have classes. We are not going to audit each and every class. What we are going to select? We are going to select what? We are going to select significant classes. From that class list, we are going to select significant classes. Significant classes of transaction. Significant classes of transaction we can call as Scots. Right? Scots. Now we can understand what we are going to do now. We had account balances, disclosures, and transactions in the financial statement. Account balances, disclosures, and transactions. We selected significant accounts, significant disclosures, significant class of transaction. Scots. All the significant items were selected to audit. Right? So you start with the client acceptance, we prepare the letter of engagement, we set up audit team. Right? We study the company, understand the business. We went through the annual reports, we talked to the last year auditor, we went through the last year financial statement, audit report, we understood the business, and we received the draft financials. Based on draft financials, we calculate the mandatory levels. Now we have draft financials with the mandatory levels, and then we selected what are the significant accounts, significant disclosures, and significant class of transactions we are supposed to audit. Because why we are selecting significant accounts? We don't need to select 100% because we are not going to give a certificate. We are not going to issue an absolute opinion. We are going to issue what? Assurance report. That's why we selected only significant items. Only significant items. Then I can see new faces in the classroom. You all can sign and go. We are in a different stage. So I'm really happy to see you all. Because for just accepted exemption, right? Difficult to attend with the work commitment or other professional commitments. But if you can cover all those things within the week, that will be very practical. Otherwise, at the latter part and the final before the exam date, you can't cover that. So the auditing is a kind of a routine process. Step by step, you need to learn logic and It's a kind of a journey, right? First day onwards, we are within this journey. First day we discuss why we are learning this subject, why we worried about the sake of subject, are we getting this? No. Sake of subject, maybe this is very easy. I will give that a link. I did kind of a lecture series so that you can refer YouTube and then you don't need to come to lectures. So whatever other lectures, they are very more than me, they may be very good, right? So then you can refer YouTube. Audit lectures, maybe millions of audit lectures with Sri Lankan auditing, no, global auditing, same. You can refer all those things if you are learning. So then those are the resources we have. But coming to the lecture is a different activity, right? Different commitment, different gestures. So then we have a momentum, we have a memory, we have a journey, right? With all those aspects, we'll add a value to you. That's an important, right? They try to come to the lectures and make sure to learn all those aspects, link between each and every aspect. That's really interesting. Otherwise, getting A pass to audit and national subject may be a kind of a base task. Within that, within my course, A plus A is a byproduct of the class. My target is what? Immediate future, within another 2-3 years time, definitely 95% you may be ODT. You may be ODT. Why? You are joining with a company or you are starting a company. You will face to the statutory audit. You are the person who are delivering evidence, providing evidence for the auditor. To face to auditor without shivering, without any nervousness, without any doubt, to face to auditor, definitely you should have audit knowledge. So then you can argue with the auditor. You can do proper argument, right? So then if they are come up with 100% sample, you can say that you are going to issue assurance report, right? Why you are asking 100%? So then that's a logical, right? Logical question to ask that to face your auditor. Definitely you should know this subject, very essential subject, right? But remaining 5% may be auditor. So you may be internal auditor or external auditor. So then this is the core subject in your profession. So then this is a very essential subject. You should learn, right? So then that's the focus, that's the target. After addressing that target, definitely the A plus A may be a kind of side product. It's a kind of a very easy task. To get an A pass to sake of passing this subject, no need to come to lectures. Ask to your friends to make your signature and you can stay and come home. No need to come. You need to learn the art of auditing, skepticism, that will add a value to you. Right? Whatever the forum you are heading, whatever the society you are in, if you are learning art of auditing, it's a super skepticism you are having. You are having a question in mind. It's creating a confidence to you. You can be auditor. Whatever the forum you are in, right? You can question whatever the logic, whatever the discussion, you can question and you can ask, you can clarify. That's all about the unique quality in auditing, skepticism, questioning mind, right? To practice that, this is a core subject you need to learn. So those are the things we learn. Why we are worried about this subject, right? So then we discuss all those things. Now we are here. We came through a long journey. We in a kind of a planning stage still, and stage we are done with like 60%. The remaining 40%. We started from client acceptance. Now we are here. selecting significant accounts, significant disclosures, and significant class of transactions. Map would tell that the link between these two and this is really important. What is that? Significant account and significant disclosure with significant class. As I said, financial statements consisted with account balances and disclosures. एक event part किया है आपके बाद financial statement consisted with account balances and disclosures. Right? Account balances and disclosures came to the picture because of transactions. So then, we are going to audit significant accounts, significant disclosures, and significant transactions. So I'm asking a question: why are we worrying about transactions? Why are we worrying about transactions? Ultimate objective is to understand the account balances and disclosures. Audit the account balances and disclosures. We need to understand the transactions. So then, once you are selecting your significant accounts and disclosures, plus significant class of transaction, there should be an interlink between this and this. The basic link, but once you are completing your export identification process, significant class of transaction identification process, once you are finishing that, you need to cover all the significant accounts and all the significant disclosures. End of the day, after you are identifying disclosures, each and every account balance and each and every disclosure should be included here. Okay. Again, I am repeating that. It's really important, right? Heart of the auditing. We have set of account balances. What are they? Salaries, EPF, EPF, activity, allowances, right? Depreciation, cost, evaluation, disposal loss, revenue. So these are the balances in the financial statement. And then last disclosures, earning per share. Likewise, we get disclosures as well. We identify these allowances, salaries, EPF, EDF, gratuity. All these identify as significant accounts. All are significant accounts and disclosures. These are the significant accounts identified. And then we are going to identify the transactions during the period. As I said, we have millions of transactions. Based on the similarities, we identify this transaction set related to payroll. This transaction set relating to the PP&E. This transaction set relating to revenue. Right. So then, what are they? These are scopes, significant class of transactions. So then, now we are going to study the link between significant accounts and significant class of transactions. Scopes and significant accounts and significant disclosures. So then, request is what? After you are completing your Scots identification, you need to complete each and every significant account should be represented at least one spot. At least one spot. So then here, 11, you can link with this payroll. Salaries, payroll EPF, payroll EDF, payroll process activity, payroll process. Right? Depreciation, PP&E, cost, PP&E, revaluation, disposal loss, PP&E. Revenue is what? Likewise, whatever the significant accounts you identify, at least you need to link with the one scopes. What's the reason? Next step is what? Scopes. Next step. Walk through. For each and every scopes, we are going to do a walkthrough test. Walkthrough test means we are selecting a sample and we are going through each and every step and we are going to understand the transaction process. Initiation, reporting, recording, all those processes will be understood by going through the process. That is called a walkthrough. Once you are doing a walkthrough, we are focusing about two aspects of a control. What are they? So there was a star plus a flower, right? That is called, we have three elements. We study one. One element is option, right? So we call that memory. If it is a control, we have three stages. Here, one, design, implementation, and the operation. Design, implementation, and the operation. If there is a control, we have three stages. What are they? Design, implementation, and the operation. If there is a control, we have three stages. These two will be tested through walkthrough test. Right? This will be tested in POC. That's operating effectiveness. That is the option. That will be desired audit approach. Okay. But I'm discussing here the walkthrough test. Walkthrough test focus about what? Once you are having transaction process, design that implementation effectiveness of the control. What is the design? How they implemented it? Understanding about the process. So understanding about the transaction process of this code done. So final objective is what? After going through this transaction process, ultimately we are covering this. All the significant accounts, significant disclosures. So then, Again, I am coming back to the rule. Each and every significant account should be represent one score. Are you getting what I am saying? Each and every significant account should represent score. Why? As auditor, we selected from the draft financial statement this significant account. Before he is going to give the audit opinion, he should know what is the transaction process of that significant account. To that, each and every significant account should represent at least one spot. Right. So that audit file will be for the vending. For the vending. Balance account clear 6 million. There's a balance 6 million. We are asking from the senior. He or she doesn't know about anything about 6 million. Then again asking from the supervisor or manager. He also doesn't know about anything about this. It means that it's a significant account. It is not linked with the spot. It is not linked with the spot. If it is linked with the spot, definitely we are doing a walkthrough. We know the transaction process there. Right? So the requirement is what? Whatever the identified significant accounts and disclosure, at least one that should be linked with at least one spot. Upon covering significant accounts and disclosures, you need to identify the spots. You are having a question. How many spots you should identify? It's judgmental. Up until you are covering your significant accounts and significant disclosures, you need to identify spots, right? That's the requirement. That's the requirement. Why scoring class? Maybe Ramayana. Hammer significant. Sabbath hammer student significant, right? Yeah, study kara. They have to be able to answer. We have separate classes. So, is there any students which not represent the batch? No, can't be. So, in a school, what's the primary objective? Giving a primary education to each and every student. Each and every student very significant, right? So that because of that, each and every student represent one class. Once you are going to the school, one student is there, it's not representing class. They are in a situation like that, no, can't be. So that they have to identify classes by representing AR. 45. Then more than let's say more than 500. We have only 9 classes. 9 classes. We have only 9 classes. So then normally we are putting 45. So then we are going to create another class. We are locating another place and we are going to create another class. Why? We need to represent other students as well. It's a very unique nature. So that we can't put into this class. So then we need to create another class. Up until covering all the significant accounts and disclosures, companies, the auditor should recognize significant class of transactions. That's a link between significant account and significant disclosure plus significant class of transactions. After identifying this, next step is what? Walkthrough test. Are you want to get a break? No. Then we can go to walkthrough test. You want to break? We are one man here. You want to break? don't get a lunch break, right? We just short break like 15 minutes. That's and go to the washroom or cafeteria and come back soon. 15 minutes, we'll come back 10:30. Want to cover some more things, right? Today we have a number of students, but try to cover more. At least we can get some of the words, right? Today we learned one word go to sports, significant account. At least we know the word, right? Again and again we can hear this. So end of the day you should know the vocabulary in auditing. Have I shared this glossary terms in auditing? You all know. I will share one document under auditing standards. What are the terms, what are the buzzwords in auditing? Right? Each and every word we have definition. Really important to use these words, right? See that sports appropriators, sufficient appropriate audit evidence, audit opinion, audit matters, and then sampling gap, and then combined risk assessment, detection risk, significant risk, business risk, and auditor, audit team, producer auditor, sampling, and component auditor. Different words are there. These buzzwords, jargons should be used in auditing paper, right? That's purely a kind of a language. You can't use, the normal, layman can't answer to audit paper. Right? So that's very technical subject. Technical words are there. You need to use that words, right? What like prescription එකක තියෙන Panadol විතරයි අනිත් ඒවා පොඩක් පුළුවන් නේද අපේ ඔඩිට් ડોක්ටර්ස්ලා ලියන ඒවා මේ එකක් කිව්වත් දන්නේ නැහැ ටෙස්ට් එකක් කිව්වත් දන්නේ නැහැ මොනවද ලියුවත් නේද එක්ස්රේ එකක් ලියුවොත් ඉන්නද මේත් එකක් ලියලා කියලා නේද ෆාමසි යනකොට තමයි දන්නේ මේක ඉන්න තියෙන්නේ මොන එකක් වෙන්නේ දාන එකක් කියලා. So then we don't know what it is, right? There's a different language among them. Doctor to pharmacist, doctor to theater, right? There's a language. You need to learn that. If you want to be auditor, you need to learn that language. You can't use kind of, the very general words, right? So then use it. You need to learn it, and then usage is the must. Keep in mind that. Right? Take a break and come. Meet up at 10:30. Yeah, here. Any doubts, any difficulty? We have a letter of engagement with the client company. This is the independent auditor. We have an engagement with the auditee to issue the opinion for the draft financial statement equal audited financial statement. So that's the process we are in. So that we understand the business, we receive the draft financials, calculate maintenance levels, and select the significant accounting disclosures, select the scores, and perform the process. So then we have questions. How we are going to select significant accounting disclosure? And what's the logic? What's the link between significant account disclosure and scores? How we are going to select it? How you know that? Now we are going to perform a walkthrough test. We are going to do a kind of a walkthrough. So then the way you are doing walkthrough for each and every course may be different to each and every course. So the way you are doing this, the walkthrough for payroll differs with a walkthrough in revenue process, walkthrough in purchase process. In a bank, we may have how many scores? More than 40 scores. Hotel, maybe 15. For manufacturing company, maybe 6. Depend on the company. Depend on auditor's judgment. Some auditor, according to auditor's judgment, cash receipt may be 1 score. Cash payment may be 1 score. Right? One auditor can decide overall cash process is 1 score. Likewise, your spot identification depends on your industry and the judgment, right? Accordingly, you are going to perform the walkthrough, right? Once you are doing the walkthrough, you are focusing about what are the aspects? Design and implementation effectiveness of the controls. And here we are getting a conclusion. What is that conclusion? Once you are doing a walkthrough, you are getting a conclusion. Whether this design and implementation rely or not rely. Rely or not rely. Rely on control or not rely on control. Through walkthrough test. Once you are doing your walkthrough test, you are completing a kind of a process documentation. You are completing control map. You are completing a kind of a flow chart. After walkthrough test, you are done with this overall process. You going through, you are drafting kind of flow chart. You identify what are the controls and process documentation is there. And this check one something. See, it's one of a payroll process, right? It's a real working. Real working, you can see the flow chart. Employee, HR department, so the finance department. End of the day, GL update. This is a critical part. This is a critical part, right? So then updating the GL, salaries, all the things should be updated to the GL. Then that is the so then all process should be documented as audited, going through overall payroll process. And then related notes, how they calculate overtime, allowances, payroll calculation, medical allowance, bonuses, right? All those things. What are the related allowances? All those things with credit debit entries. All those things we are documented. And then control, here we are mentioning as cap control analytical form. What are they? Controls. Here we have the risk, what could go wrong, and the control. What could go wrong and the control. What could go wrong mean? Is the risk. Risk versus control. We have a risk and then the control. Always you are putting a control for risk, right? That's the understanding we had. Control එකක් නැන්නේ risk එකක් තියෙන හැටි. නේද? නින්දයා නිසා තමයි alarm එක දිව්වේ. Can you remember that? Yes. Whatever the control we are putting in because of a risk. What's the risk here? What ensure that the time work by the employee are correctly recorded? What ensure that OT hours sent to the payroll department are accurate? So these are the controls we have, right? And then is that accession? What's the accession? And nature of the control performed by frequency, critical or not. Right? Likewise, we have kind of a control mapping. This is a real workthrough document, right? There's a real workthrough document. Right? So then I hope you are clear. Once you are doing the walkthrough, you need to go through the process of each and every course. In other words, once you are completing your walkthroughs, once you are 100% completing your walkthroughs, you have completed all the courses. In other words, you know about each and every significant accounts and significant disclosures. Because once you are completing SWOT identification, you covered all those things. So then, after completing walkthrough test, you well aware about all the significant accounts. Right. So then, through this study, you are coming to a decision about design and implementation effectiveness of the control, whether it's reliant control or not reliant control. That's about control risk. That's about control risk. So then, auditor having a risk. What is that? That's called audit risk. Audit risk equal to control risk plus inherent risk plus detection risk. Audit risk is what? Always risk is a deviation from the expectation. Auditor's expectation is to deliver a correct audit opinion. Right? So they're issuing incorrect audit opinion, issuing correct opinion at the point of having material misstatement. Still, we are issuing correct opinion is a audit risk. We are issuing a correct opinion, clean opinion, but financial statement having material misstatements That is called audit risk. Auditor risk is of issuing incorrect audit opinion. That's the risk. Right? So to affect that, what are the criteria will impact to that? One is control risk, one is inherent risk, one is detection risk. From here, two of them are common. These two relating to the company. We can call what? Risk of material statement. This is relating to whom? This is relating to how they relating to the auditor. Audit risk is, I explained that, issuing an incorrect audit opinion. Right? Issuing the incorrect opinion may be impacted because of two parties. What are they? Auditor and the company. Auditor ni awal dia nak peluang, company awal dia nak peluang. Because of inefficiencies in the company, auditor can issue wrong opinion. Because of the inherent limitations, inefficiencies, incompetencies, wrong judgments, wrong conclusions, auditor can issue a wrong opinion. So then, audit risk will be impacted by two parties. What are they? Company, other word client, and the auditor. Client side we have two risks. What is that? Inherent risk and the control risk. Inherent risk is what? Without thinking about controls, what are the areas we have inherent risk? Inherently, this area creating a risk, maybe business risk, right? Inherent risk. So what are the inherent risks? Inherently, in zero control level, we have a risk. Inherent risk. Inherent risk cannot be the cash word. That will be the cash කියන්නේ asset එකක්. share කියන්නේ asset එකක්. මේ building එක කියන්නේ asset එකක්. රුපියල් 1 million අද ඉස්සරහා මේ color light එක ගාව දෙන තියෙන 1 million cash bundle එක. මේ building එකක් තියෙනවා. කුටුකුත් තියෙනවා. Three assets. But some of the assets having inherent risk. The cash having inherent risk. Existence related inherent risk is there for cash. Right? So then gold, whatever the other asset, is whatever the liability balances, insurance contract liability, contingent liability, valuation accession. We are having the inherent risk. So we are having inherent risk that can mention as default risk. Some of the area having default risk without thinking about the control. Default, that area having a risk. This means that asset, that liability will be impacted. That is called a risk. Right? So then if we are having an inherent risk, management perspective, management side, what we have to do? They need to implement control. යාට risk එකක් තියෙනවා නම් control එකක් දානවා management එක. They are responsible to design and implement controls. Inherent risk එකක් තියෙනවා නම් මොකද කරන්නේ? cash වල risk එකක් තියෙනවා. Cash වල risk එකක් තියෙනවා. What they are doing? They are putting a safe. They are putting kind of a, the safety lockers, they are putting CCTV, right? So then those are the controllers. There's inherent risk, we are putting controllers. Once you are putting your control, at the point of your initiating that control, then again a risk will be created. What is that risk? What they control? A risk again. That is called control risk. Control risk. Are you getting what I am telling? We have a asset having inherent risk. We are putting a control. Once you are putting that control, what's the expectation? Is there any time this inherent risk came into the picture? This control should be activated, and it is required to save the company, save the asset. That's the control. Cash having the inherent risk, because of that we are putting save. Once you are putting a save, again it's creating a risk. What is that risk? Always we are telling that expectation from the deviation called as a deviation from the expectation called as a risk. We have expectation of the control. We have expectation of the control. What is the expectation? Because of this control, this asset will save. Right? Cash is inherently, we have a risk. Because of that, we put a CFO. We request more than 500,000 payments should be approved by the CFO. Because it's a very useful asset. We have inherent risk. We put a control, more than 500,000 payments should be approved by the CFO. Once you are putting this control, there's a risk. What is that risk? Order මේක හරියට වෙයිද කියලා ඩවුට් එකක් තියෙනවා. අන්න ඒක තමයි කියන්නේ control risk කියලා. That is called control risk, right? ඔයාට inherent risk එකක් තියෙනවා. මොකද්ද? හොඳට උදේට නිින්ද යන්න. alarm එකක් නේද? හැමදාම එන්නේ lecture එකට පරක්කු වෙලා නේ. හැමදාම lecture එකට පරක්කු වෙලා තම දවසට එන්නේ හිතෙන්නේ නැහැ. 10ට විතර එන්නේ සැම්බලි. So then you have an inherent limitation. You are putting into kind of a deep sleep. You can't wake up early. That's an inherent limitation. Inherently you have that habit. සමහර තමයි මේ හතරට හැරෙන ඕන ප්‍රශ්නාවක්. දෙකට විදාගත්තත් හතරට හැරෙනවා. That may be again inherent limitation, right? So the inherent risk is there. So then you are having inherent risk. You are putting a control. What is that? You are putting 6. You are putting alarm. Alarm 6 times. You put 4 o'clock, 6 o'clock, 7 o'clock, 7:30 and 10 o'clock. 6 alarm. Right? So what is this? You put a control. Once you are putting your control, then again it's creating a risk. What is that risk? You have internal risk plus control risk now. Control risk is mobile. Once this control activates, still you won't be wake up. Right? So then you can't still wake up. So there's again risk. What is risk? මේ alarm එක වැදෙයිද කියලා risk එකක් තියෙනවා නේද? අදිසියවත් ෆෝන් එක ඕක මොකද වෙන්නේ? alarm එකක් නැහැ, lecture සුදු නැහැ, exam එක නැහැ. So then battery dead වෙන්න පුළුවන් probability එකක් තියෙනවා. ඇහෙන් නැති වෙන්න පුළුවන් probability එකක් තියෙනවා. සමහරවිට ඇඳ යටට වැටෙන්න තියෙනවා. ෆෝන් එක ඇඳ යට. ඇහෙන කොහෙන් නැහැ නේද? Humana. Control may not be activated. Once you are putting a control, at that point it's creating risk. That is called control risk. Simply, what is that? we have the expectation about the control, deviation from that expectation called as a control risk. Right? So then this combination called as risk of material misstatement. So then company having a risk of material misstatement because of these two inherent limitations, management took actions. If there are loopholes in between this combination, risk of material misstatement will be highlighted. That will impact to the audit risk. Then again, auditor side, auditors we can consider as always human being. Sometimes we are having robotics auditors. Still, logic was developed by the human being. Again, we are having kind of a detection risk. Right? The sampling errors, conclusion inefficiencies, logic kind of a different inappropriate audit procedures, impractical audit approaches. Because of all those things, auditor can do mistakes. Right? Because of his or her inefficiencies, audit report may be misleading. The report may be having incorrect opinion. Both considered as the audit risk, right? And the detection risk, internal risk, and the control risk. That's the final results. Maybe the impact to the audit opinion. The audit risk can't be reduced to zero. This can't be reduced to zero. We don't need to reduce to zero. Why? What's the reason? We don't want to issue a certificate. We are issuing an assurance report. So then we don't need to reduce to zero. We want to reduce to that audit risk to acceptable low level. Then only we can issue the audit opinion. So then reduce this risk to acceptable low level, what we have to do? We need to perform audit procedures adequately. We need to gather sufficient and appropriate audit evidence to reduce the audit risk to acceptable low level. Audit risk containing control risk, inherent risk, and the detection risk. These two we consider as risk of material misstatement. This risk should be calculated to the accession level. Accession level. Risk of material misstatement. Risk of material misstatement should be evaluated to the accession level. To the accession level. This is important. Risk of material misstatement evaluation should be done to the accession level. What do you mean by that? We have different levels, A level, O level. The accession level. We have financial statement level. We have financial statements. Financial statements. Statement of financial position. In that we have a balance. What is that? Cash. What is that balance? Cash. Cash 10,000. This is financial statement level. This is balance level. We have cash this much. Management saying that, management giving kind of a comfort to the public, this 10,000 is correct. So then, in other words, They are giving information to the public about what? About the accessions. What are the accessions? The cash valuation, existence, right and obligation, presentation and disclosure, completeness. These accessions are correct. Accessions are correct. Because of that, management saying to the public, this balance is correct. Right? We have statement of financial position, we have cash balance, we have valuation of cash balance, existence of cash balance. Existence of cash balance. This is which level? Accession level. We are addressing the accession level, not the balance level, not the financial statement level. We are addressing the accession level. We need to calculate the risk of material statement to the accession level. Inherent risk plus the control risk. To the financial position, cash balance, existence. What are the inherent risks? What are the control risks? We need to do the risk of material statement to the accession level. Are you getting what I am telling? Accession level, we need to evaluate the risk. The accession level, we need to evaluate the risk, right? Each and every accession, each and every key accession, we need to assess the risk. Then only we can decide to this accession, we have a high risk, we have a high risk, we have moderate risk, we have minimal risk, we have low risk. That is called what? That is called combined risk assessment. Combined risk assessment. Combined risk assessment. So then evaluating risk of material statement to the accession level. So summary we can call as combined risk assessment. So each and every significant account, each and every significant disclosure, we do our risk assessment to the accession level. So then we may have 4 types of CRA, different CRA combined risk, inherent risk and control risk. Inherent risk and control risk. Inherent risk, some of the area, inherent risk higher. Some of the area, inherent risk lower. Inherent risk higher, management put controls, we can rely on control. Inherent risk lower, still we can rely on control. Inherent risk higher, not rely on control. Inherent risk lower, not rely on control. What is the highest risk stage? Inherent risk is higher, control risk, not rely on control. This is the accession level, highest risk level. Inherent risk is higher, control risk also, not rely on control. Inherently, cash, inherent high risk item. Management put controls, we can't rely on the control. They don't have safety lockers, CCTV, they don't have proper control mechanism or cash. So then, inherent risk higher, not rely on control. Combined risk is high. According to this, according to this, according to this, according to this, we are going to plan audit procedures. We are going to plan audit procedures. Audit procedures. Audit approach will be decided based on this. Audit plan will be derived. Will be derived based on CRA. Compliance assessment. Audit plan in the sense, audit procedures will be decided. Nature, time, and extent. Nature, time, and extent of audit procedures will be decided on the compliance assessment. Nature, timing, and the extent. Nature, time, and extent. Nature of audit procedure, timing, which time we are doing, extent, how many sample items we are going to select. That is all about what? Audit plan. Audit plan will be derived from CRA. It was done to the assessor level. Right. So then most of the cases mentioned in this slide deck we covered. Audit strategy, audit plan, inherent risk, control risk, detection risk, audit risk equation. Audit risk, inherent risk into control risk into detection risk. Right? It's called risk of material misstatement. Last detection risk can call as audit risk, right? Inherent risk, the susceptibility of the assessment about the class of transaction, account balance, or disclosures to misstatement that could be material, either individually or when aggregated other misstatements before consideration of any related controls. Before consideration of any related controls, that's really important. So that's what I want to highlight. Before consideration of any related controls. Before we are implementing controls, that is called inherent risk. So then, accession level, class of transaction, account balances, and disclosures. We need to evaluate inherent risk of account balances, transaction, and disclosures to the accession level, the misstatement to aggregate level or individual level, which will impact to the balance at the zero control stage. That's called inherent risk. So then, suspectability of accession. So then, accession is there. So then, accession is there. Validation accession is there. We have a doubt. We have suspect about the accession. That is called the risk. That risk will be derived because of inherent risk at the zero control level. Right? That is called inherent risk. I hope you are clear, right? You need to study this. Now you can start your learning, right? I have given that guidance. You can start. 12:30 to 12:30. 11:30. 11th. पढ़ाना था कि 11:30 में 11, 13 Galle. So then I came here 7:50. You all came here 8:30. Then you drag till 11:30. So then here, stop timing and direction. This is the one I want to highlight. Nature timing and extent. Nature timing and extent. So that is all about what? Audit plan. Audit strategy means scope, timing and direction. Audit strategy. Scope, timing and direction. Audit plan means nature timing and extent. Strategy and the plan. What do you mean by that? Not in auditing, in common sense, strategy and the plan. The plan will be derived from the strategy, right? Let's say in an organization, you may have a strategy. Your strategy is expand within the country. Your strategy is expand down south or Colombo city area. Or you are going to go abroad, right? That may be your strategy. Accordingly, your plan should be decided, right? What strategy එක මොකක්ද? ඒක අනුව අපි plan එක execute කරන්න ඕනේ. වාගේ strategy එක lecture වැඩි වෙන්නේ නැතුව exam end එක වෙලා මොනවම හරි පොඩ්ඩක් කාගෙන් හරි අහගෙන you can go through the subject. So that's the strategy you have. So then you don't want that kind of first class or second upper. You don't want to do specialization degree. Your strategy is just getting a general degree, and accordingly you will decide nature, time, and extent of your plan. So whatever the task you are doing, firstly you should have a strategy. For one task, you may have different strategies to achieve one target. ඔයාට ගෙදර යන්න පුළුවන් විදි ගොඩක් තියෙනවා. පයින් යන්න පුළුවන්, බස් එකේ යන්න පුළුවන්, කාර් එකේ යන්න පුළුවන් නේද? එයාක්‍රාෆ්ට් එකේ යන්න පුළුවන්, ස්කයි ට්‍රේන් එකේ යන්න පුළුවන්. ලංකාවේ ස්කයි ට්‍රේන් නෑ. සදාකාලික ට්‍රේන් තමයි. You have different options. You have different strategies. So then, if you are using your strategy, accordingly you need to plan. What training එක පාවිච්චි කළා what plan එක හදන්න බෑ. ඔයා ගෙදර යන්නේ 5 minutes වලින් කියලා නේද? So then you should decide your plan according to your strategy, right? So then always auditor should have a strategy. Audit should have a strategy. Accordingly your audit plan should be decided. Audit plan consisted with what? Nature, time, and extent of audit procedures. So then, this statement is very important. What is that? The audit plan converts the audit strategy into more detailed plan. Include the nature, time, and extent of audit procedures. Yes. To be performed by engagement team members. The engagement team members. You know the composition. How you are going to arrange a team. What's the composition? What are the expectations? What are the consideration areas once you are appointing audit team, right? And in order to obtain what sufficient and you can put sufficient appropriate. You can put a comma here, or you can put sufficient and appropriate audit evidence. Right? Put a comma here. Sufficient and appropriate audit evidence to reduce the risk to acceptable low level. Which risk? Reduce the audit risk. Audit risk means inherent risk, control risk, and a detection risk. To acceptable low level. Are you going to reduce to zero? No. To acceptable low level, you need to gather sufficient and appropriate audit evidence according to the plan, right? You are performing audit procedures according to the audit plan to gather sufficient and appropriate audit evidence to reduce the audit risk to acceptable low level. මේ sentence එක අපේ ලියාගෙන ආවිලා හරි paper එකේ ලියන්න මතක තියාගන්න. අදාළ ප්‍රශ්නෙට. So this is all about auditing, right? This is all about auditing. All concept summarized to this sentence. Okay? You are learning about this like the series depend on about this. How we are going to do this? We are learning this. Right? So then, with that thought, I'm going to stop for today. I hope today we discuss a lot about audit process, level engagement activities, costs, material levels, significant accounts, inherent risk, detection risk, control risk, different aspects, accession level controls, right? So this process is really important, right? Yeah, here, yeah, at the walkthrough level. Walkthrough level, we did with risk of material misstatement evaluation, and accordingly we completed the completed CRA, combined risk assessment. This is combined risk assessment, put adjective I. This is initial CRA. Initial CRA. Keep in mind, put a star mark here. This is the initial CRA. Accordingly, we decided audit plan. Audit plan derived with length, time, and extent of audit procedure. Example audit procedure: inventory verification. Inventory yes, in a company they may have inventory, right? As audit procedure, we are counting inventory items, right? We are observing the inventory count. So then nature of audit procedure: counting inventory item, flow to sheet, sheet to top, right? Time. This time we are going to participate in inventory count at the year end, interim date, or week after the year end date. Time, extent. How many samples you are going to cover? How many locations you are going to cover? That's all about your decision, your judgment, your risk level. Nature, time, and extent will be decided based on what? Based on risk of material misstatement, based on CRA. If your CRA is high, inherent risk is high, control is not relied, your extent may be too high. You are going to cover all the locations, right? Your sample size may be high. Your timing may be 2 times. You did the interim as well as year end because of your risk level is high. Your audit plan, audit procedure, nature, time, and extent will be decided on what? Based on the combined risk assessment. Combined risk assessment to the which level? Assessment level. That story you should tell to someone else. That skill should be developed. That's my request. At the making marks here, that's enough. You can hear this story within this lecture series, right? Each and every day add something. Try to tell this story to your friend, right? So then develop, link all those things, and then you can learn this art of auditing, right? That's a request. I hope you had a good time. Yes, reasonably, I hope you are getting something about auditing, audit techniques, right? So after having this background, after having this platform, you can discuss about advanced auditing, right? Advanced audit techniques, how we can audit derivatives, options, consolidation, impairment, deferred tax, ROU asset, 5-step model. All those things can be audited if you have this basic understanding, right? Okay, that's it.